Hey guys, welcome back to another week of Mortgage Matters in Minutes. I'm your host, Brent Rasmussen, owner of Mortgage Specialists. I think in my 25 years of doing loans and helping individuals, this week and information that's been coming out has been the most biggest changes we've seen in quite many years. The recent question that people are having, or discussions I see on social media and message boards about how upset and angry people are about the changes that Fannie Mae is making, stating they will accept loans without a minimum credit score requirement of a 620. So let's get into it. Let's talk about it, because there's a lot more that news stories might not be sharing with you to kind of get you to click and read the news story or watch their news station. And we see that happen, especially when we know our industry much better than people that may be reporting on it. So what came out this past week, that Fannie Mae stated they were going to get rid of a minimum threshold of a 620 credit score. Yes, that is fact. What is not fact is that they are going to loosen up and open up their credit standards. They're still going to have their basic credit standards of the world. They're just not going to, they're no longer going to have the computer software system say an automatic no to someone below a 620 credit score. How I've explained this to some individuals is you might have someone that has a credit score below 620 that is less riskier than someone that's above 620, because all loans are not only based upon credit score. We also look at their debt to income ratio. We look at their income, their stability of income. We look at their assets and their down payment, their loan to value, how much they're borrowing, payment shock that they maybe already been making, extra additional income, reserve set aside. There's lots of different things that we are going to look at to approve loans. So starting November 16th here coming up, when you run a loan through the automated systems, which one is Desktop Underwriter, DU, the other is Freddie Mac's Loan Product Advisor. Those are both software algorithms. All conventional loans are ran through those systems to conform to the secondary market to get approval. So what they're telling you is that no longer will that software cut off at 620 and say no loan below a 620. There are a lot of clients across the country that might have what's called non-traditional credit. They might be able to prove that they've made payments and just haven't paid normal credit card bills, haven't paid normal car loans, but they can show through what we call non-traditional credit that they've made payment histories to different individuals over time. And they might be less risky because they're putting down a huge, large down payment, or their debt to income ratio is significantly lower than their lenders out there. I'm not saying that I see those particular situations. I am just explaining to you what the real situation is. So why make this change now? Well, obviously with housing, it's one of the most expensive times we've ever seen. Not because of the interest rate, price of homes, property taxes, homeowners insurance, all that adds into the cost of your home. So the current administration is looking for different ways to see if we can find individuals that still are low risk to obtain financing throughout the process. So that's been talked about for a while, and these type of ideas are coming. Maybe next week we'll talk about the next idea of talking about extending loan terms, whether that's a good or bad idea. But today we're just talking about the Fannie Mae change. So who benefits? It might benefit some individuals, obviously below a 620 credit score, but we're not going to see a massive impact, in my opinion. The numbers just don't show it, because you still have to have a very strong risk profile. And generally with individuals below a 620 credit score, we don't see that. But lenders, as we talked about a couple weeks ago, can have overlays. They can choose not to take on that 620 or less credit score, even if it qualifies through that software system. So another challenge we can see possibly happen, is which we don't know yet, is whether you can even obtain mortgage insurance or not with a credit score below 620, or what is that pricing even going to look like to make sense of it all. So there are additional factors in this, not just saying we're opening this up to the world to subprime and giving everyone a loan below 620, I'm going to share with you it's going to be the smallest sliver of individuals that are going to fit into this particular scenario that we're talking about. So I wouldn't stress out. I wouldn't get into an argument. I wouldn't get into a discussion with real estate professionals or other individuals because it's not maybe worth it until you have all the facts. We're not going to see what shakes out until we start running these loans through the software system to see if anyone gets approval. In doing this for 25 years, I've seen a lot of these things occur. Hey, we'll do a loan if the credit score is way here. We'll do a loan if this is the scenario. Oh, but their middle initial, it happens to be V, and we'll only do the loan if the middle initial is Q. So there's all kinds of definitive, defined underwriting rules that still are going to be in place to make sure we're offering prudent and responsible lending. That's what it really all comes down to, is still offering loans to people that might be creditworthy, that before was a mandated cutoff of a 620 credit score or less. Again, I don't assume to see a lot of this change markets. It's just a particular black and white that's went away to possibly open up some good credit individuals for buying a house. Again, we speak each and every week. I don't want to get political. I try not to get political. I'm here to try to educate you, to get you facts so you know what the truth is. I'm not here to give you a side one way or the other. I'm just explaining to you what the news stories are telling you, and what you're seeing in the headlines might not be matching. Because if what really happened was, hey, we're opening loans up to individuals with much lower credit scores, and we're also opening up higher debt to income ratios, lower down payments, like we did during the subprime, I can share with you that's not even legally possible because of all the federal laws that exist. I instruct those courses. I know those laws. I can speak to all of those laws and explain why subprime, generally speaking, has not come back, because after 2008, there are tons and tons and tons of laws that will not allow that situation to reappear in our markets to affect the whole United States economy and your retirement accounts. If you have any questions, feel free to give me a call anytime, 402-991-5153. Please like and subscribe, share this, repost this, get the information out there so people have accurate info from a local lender here in the Omaha, Nebraska area that knows the facts. I'm Brent Rasmussen, owner of Mortgage Specialists. Check us out. We'll talk to you soon. Thank you. Mortgage Specialists. Driven, trusted, reliable.